There are three critical things that we need to talk about regarding the market and economy right now. Number one, the Federal Reserve. Number two, the worst earnings call I have ever read in my career. Now, you're going to laugh when you hear it because you're like, oh, Kevin, do we really care about this company? It's going to be an example of how quickly things can turn, and you're going to learn what to look for to identify that kind of U-turning. Then we'll obviously get into talking about earnings catalysts. Now, many of you know that going into this earnings week, I have started loading up on shorts Friday, Saturday, it's not for Saturday, Friday, Monday, and Tuesday. And I have closed some of those as of this morning. Profit up $75,000. Thank you very much. If you want all of those alerts on buy and sell alerts for trends that I see, I can't guarantee that you're going to make money, can't promise you anything, but I will tell you exactly what's on my mind, what I'm doing, and you'll actually see my trades, my entries, and my exits. So I want you to know about those when I send those trade alerts in the Stocks Insight group. We do have a coupon expiring tomorrow. That's Fed Day. It's usually when we have an expiration. Anyway, let's now talk about the Federal Reserve. The market broadly today anticipates and expects that tomorrow the Federal Reserve is going to lay the groundwork for, obviously, rate cuts in September. Yes, my friends, the markets have priced in rate cuts for September. We already know that. That's really, really obvious. But what happened this morning that probably throws cold water on the idea that J-Powell needs to go up there and say, we're cutting quickly? Markets right now are pricing in the highest chance of a September rate cut than I've ever seen here on the world interest rate probability sheet. We're at 1.15% right now on the probability of getting rate cuts in September. And quite frankly, it's almost certain we are going to get rate cuts in September. We're not going to get a rate cut tomorrow. There's a 4% chance of that. We are pricing in 1.8 rate cuts for December. 1.8 cuts for November, 2.75 rate cuts for December, and 3.4 rate cuts for January. So you're really pricing in the cuts here. But why may the Federal Reserve not tee up rate cuts tomorrow, folks? It's simple. The JOLTS report came in hot and was revised up. So more job openings and a revision up of job openings. This is warm data. This does not suggest an imminent collapse in jobs data, and without an imminent collapse in jobs data, the Federal Reserve does not need to rush to signal that they are going to cut. And so I don't think they're going to be in a rush to say, yes, we are committed to cutting in September. Instead, I think the market's frankly going to be pretty disappointed tomorrow when Jerome Powell gets his butt up there and they're like, so have y'all talked about cutting? He'll probably say something like, some of us have beginning the discussion of easing, but we have not committed to anything. We remain data dependent and will make decisions meeting by meeting. So to be clear, this is not an announcement that we are going to cut rates at any point in the future. However, we will make that determination at the next meeting. And I think markets are going to be pissed by that. But it's all going to come down to what happens with earnings. Earnings will amplify what happens tomorrow. That's the way to look at it. Whatever the Fed does is just going to add fuel to the fire. So if the market goes bearish tomorrow, whatever the Fed says is just going to make the market more bearish. If earnings are good, like AMD and Microsoft today, if earnings are good, it's just going to add bullish fuel to the Federal Reserve fire. So I don't think the Fed is the catalyst. I think the Fed is the amplifier or the accelerant. Okay, now though, let's talk about, I realize this one's ridiculous. I'm sorry, I'm under the weather. I'm like hiding in this office all day today because, well, I mean, nobody wants to be sick, but I also don't want to get anybody else sick. So I'm just like, I'm gonna stay away. So this is by far probably the worst report I've read in my career. And it's not that like this is an industry that I really pay attention to. It's what I want you to know about what happens to almost all companies as you go into a recession. I want you to think about this for a moment. As you go into a recession, what usually happens is you're like, oh, okay, there's some slowing. Okay, that was odd. And then you're like, oh, this slowing's going on longer than we suspected. Oh, we've never had slowing like this before. And then you start looking and you're like, maybe we should start cutting some expenses. And then you go, yeah, Yeah. Let's start cutting expenses for next, like, 2026. And then you start cutting 2026 expenses. And then it's like, hey, but maybe we need to drop the price of our product because we can't sell our product anymore. This is crazy. Okay, let's drop the price of our product. Oh, it's still going bad. And that's when things start getting sweaty. And when things start getting sweaty, guess what happens? People get fired. And the problem is, it happens very, very slowly, and then it happens all at once. Now, I suggested on Twitter, it's a toxic wasteland, but I still use it. I suggested on Twitter at RealMeatKevin today that, quote, just read one of the worst earnings calls in my career, and I read earnings calls every day. If this consumer call is a sign of what's to come, I'm selling everything and a recession is near. To which, of course, some loser said, if you keep calling for a recession, at some point you will eventually be correct. To which I replied with the following. Cute attack. I haven't called for a recession, but since July 10th, if you actually pay attention, you'd see I've been long, mostly bullish, and excited about the volatile Nike swoosh recovery I've called since November of 2022, evidenced by my public fund as well. Just totally transparent trades, right? But I suppose it's easier to write this than, what did I say, this nonsense than actually consider reality. So, anyway, you know, people like to lash out when they're long and you're short and then you're winning. They're like, well, you always call for a recession. I'm like, no, I really don't. Like, if you actually listen to my videos, I really don't always call for a recession. I'm generally Train America. And I hope that this is not a recession. What I'm about to show you, I hope is not recessionary. Because if it is, it hurts me. I am more long exposed than I'm short. It's way more long exposed than I'm short. I have a public fund that I want to keep going up. I also have 2 startups that I don't want to suffer through a recession. I don't think they will suffer. We'll be totally fine. But it's just going to slow down growth. So I don't want a recession. Look at this. That said, the operating environment has changed rapidly during fiscal 2024. That would be the last 12 months for them. Their 24 just ended. As global restaurant traffic and frozen potato demand has softened. Don't make fun of me, okay? Yes, potato demand. It's a French fry frickin' company, okay? Yes, we know the recession has hit restaurants, but I want you to see how important this is. Watch this. In fact, the downward trend accelerated during the back half of the year and into early 25. That would be July, which means it's actually getting worse right now. Their 2025 starts in July, which means it's getting worse. They're also trying to right-size their pricing to fit their consumer needs. In other words, they're dropping prices. Their sales growth will be driven by volume because what they'll do is they'll try to sell more at lower prices. And when that doesn't work, they're going to take it in the margin. And when that doesn't work, they'll start firing people. They also talk about how they're encouraged that restaurants like McDonald's or whatever, quick service restaurants, are going to start more promotional activity, which they mention here. And they say, hey, so far, that increased promotional activity has not made a difference, but it should because historically it does. In other words, historically, we should see promotions help us, but so far we're not seeing any signs of that. That's very bad. It basically says we're hopeful, but we're not going to guide up. We're going to guide down instead. That's very, 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 very bad. Okay, now I want you to keep seeing this because this gets ridiculous here. We expect the operating environment this year will be challenging. Consumers will be more intentional with dollars they spend in a pressured economic landscape. There's more. We don't expect meaningful contribution from price. Duh, pricing is over. Inflation is plummeting, and a recession is going to drive us into straight deflation. They're going to turn that money printer back on so fast. You've never even seen a money printer turn on as fast as they're going to turn that damn money printer back on again. But only after everything goes to crap. Anyway, so let me get to my next arrow over here because it gets worse. Okay, you ready for this? Oh, yeah. We are in uncharted territory to see a decline for this long. Look at this. We've seen traffic trends negative before, but we've never seen traffic trends in restaurant collectively this prolonged. Okay? This is like what I was saying earlier. They're like, oh, it's bad. Oh, it's worsening. Oh, wow, we've never seen it this bad. What does this mean for your ability to price? What do you think? They're gonna drop prices like crazy, like a freaking rock, because they're getting reamed, absolutely getting destroyed. What else do we have here? Market share losses, blah, 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 blah. The rest doesn't matter so much. The point is, this is a bad start. Now, I understand. It's like, wow, that's the worst earnings call you've ever read. Yeah, usually earnings calls are like, here's some bad news, here's some good news. There was no good news in this. There was also no reading between the lines necessary. It was straight up, it's bad. It's never been this bad. We are hopeful because historically we should be hopeful, but we could be wrong because we're not seeing any signs that sales promotions are even helping right now. The consumer is probably going to continue to be more choosy. Our American consumer makes up over 70% of the market. And yes, dang it, when Jim Cramer starts pitching me tequila, which he did this morning on the Market Open live stream, and he started reading off how certain brands of tequila were on sale, the very first thing I did was go to buy that tequila. I mean, short the market. So, look, not good. Again, I understand. Maybe it's just restaurants, and that's possible. We go through cycles. First, it's the chips recession. Then it's the freight recession. Then it's the restaurant recession. Then it's the apparel recession. What frickin' ever. I get it. I totally get it. We go through cycles. But my point is, this, my friends, is exactly what could happen in artificial intelligence. Because first what happens is you have massive pricing power, huge PP. Your PP gets so large because there's a demand for a product. Then you explode manufacturing capacity. But then all of a sudden the demand for that product starts shrinking because people are like, oh, how useful really is this AI stuff? Then more competitors enter the space with also more competitive capacity. Now all of a sudden you have way more capacity and supply you could possibly imagine you would have ever needed. And then what ends up happening? Prices go down. And then when frickin' prices go down, what ends up happening? Kevin ends up saying, please look at Bloomberg for a second while Kevin gets up and closes the door because there's a child screaming and not both of my doors are closed and I'm going to close both of them because honestly it's probably bothering me more than it's bothering you, but that sounds like Violet going ape. Some child not happy over there and I'm like, oh boy. Okay. No problem. So anyway, the last thing that we have to hit on exactly, though, is earnings. So we talked, oh, I just got stopped out. Hold on. Your boy Meet Kevin just got stopped out. Send the trade alert. Oh, he's out. So what usually happens is I'll make a trade and I'll send an alert. And then I set a stop loss, which is actually, in this case, it's a take profit. I got into this trade at 207 on an option contract, and I just left it with a stop loss at 243, 36 cents. Let's go. Times obviously the amount of contracts and all that kind of stuff. That's good. Let's go. Let's freaking go. More tendies, baby. Daily PNL up. Oh, over 80,000 now. Let's freaking go. Let's go. Anyway, remember, if you want all those buy-sell alerts, make sure you are part of the Stocks and Psychology of Money group. That was actually a call, very, very short-term call there on Tesla. And so picked up, I don't know, that was like 7K or something like that I picked up on Tesla. So sweet. While I was filming this, let's freaking go. Okay, so now let's get into, well, folks, we are going to get into earnings expectations. Look, we don't need to spend long talking about this. We have massive earnings catalysts this week. We already know that. Microsoft and AMD today. I'm going to be covering those very closely. Starbucks, Pinterest, Lemonade for Solar Caesars. Tomorrow we'll get the ADP jobs report and the employment cost index. I don't think those are going to matter near as much as the Friday jobs report, but we'll also have Fed Day tomorrow, followed by a Wingstop, MasterCard, Kraft, Meta, ARM, Qualcomm, Carvana, Lam Research, Etsy, Western Digital, Cheesecake. Thursday, Wayfair, Moderna, ISM Manufacturing, Roblox, Crocs. Thursday afternoon, Amazon, Apple, Intel, Coinbase, Roku, DraftKings, Block, Snap, Cloudflare, DoorDash, Rocket Mortgage. And then, of course, Friday, we get the jobs report. So this is a very, 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 very big week. And I want to put this very, very clearly because sometimes people like to miscontextualize myself, or me, like to miscontextualize me. I want to be very clear. I think that after the election, we go, as long as there's no recession, it's straight up moon, maybe go margin, but we're not post-election, and I'm not sure we're past recession yet, right? Okay, good. Now, with that said, I still believe in the volatile Nike swoosh, absent a recession, but I do believe that if earnings go bad this week, we will be at the beginning of a recession. I don't want to be at the beginning of a recession. I would rather earnings go really, really well this week. And then I could close all of my hedges, I could close all of my shorts, and it could go back to being bullish. Today, after reading the potato report, by the way, was Lamb Weston Holdings. After reading Lamb Weston Holdings, I'm probably at about a 3.5 on the bear scale. So I'm nervous. I'm very nervous going into these earnings. I pray they do well because I don't want the market to go into a recession. Because that will hurt everyone. I'm just trying to be as transparent as possible. Of course, some people, they just like to look at titles and then say stupid things or miscontextualize things. But, whatever. That's their fault. I'm just going to keep putting one foot in front of the other, trying my absolute best every single day. And if I see a trade, I'll send you an alert on it. Join the course. You pay once, you get lifetime access forever. You get all the course member live streams as well. We did a lot of research this morning on the course member live stream. We also went into Monster Beverage, JetBlue. We have some other stuff going in there as well. So some really good quality stuff. Hope to see you there, folks. I love you all. We'll see you in the next one. Goodbye and good luck.
These things that you told us here, I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.